Trading Unlocked, and we are here on January 17th, 2020 with a daily Forex market breakdown for you. And we're going to take a look at the foreign currency crosses around the globe and see how they are shaping up at the end of the week. Most of the markets are closed. The U.S. markets are winding down. We are heading into the afternoon trade, and things are kind of quiet. Dollar seems to be getting a little strength today. So with that, let's go jump at our disclaimer real quick, just to remind you viewers out there that this is for illustrative purposes only. And if you have any questions about any of these markets, just leave a comment on our YouTube video and or in the chat right now, and we will try and answer them. Okay, with that being said, let's go to our live screen. Okay, we are now at the Forex-Trading-Unlocked.com website, and we are on the workstation page. We don't need to look at the numbers. Everything is out for today. We have the US dollar Canada market pulled up first. So what are we looking at here? Well, we're looking at a little bit of a bull today. The US dollar index is strong today, but it's more of just a sideways nonsense is what it is. If you really look at what's going on in the US dollar Canada, it's been a range trader's delight and a swing trader's nightmare. The last higher or lower move high and the last lower move low, which keep the trend intact to the downside, I think are your key pivots that you need to be aware of as we move it forward into the second half of the month of January. Today the trade is settling down. There's really nothing to be really active or looking at. So we need a breach of this $31.06 up here. That should spark some momentum to carry this corrective rally further up. Remember, the overall trend for this market is down. It's been grinding lower, and when it sells off violently. So I think that since the dollar index has a little bit of a recovery the past couple days, especially today, that this is where you're seeing this strength from. Any failure from this cardinal number here, this pivot at $1.3041, will have the market back on edge, targeting this lower swing low at $1.29.5. All right, now with that, let's go and look at the US dollar Japanese yen. And this market, boy, all I can say is it just wants to keep on going. So this last swing low would be our major downside pivot, which I don't think you're going to see this much coming near this area for quite some time. The US dollar index, whether it sells off or whether it rallies, this market is in a bullish trend. So since we had a real tough time with the resistance here, we're going to put this pivot here at 109.53. Anything above or below that, I think, is your short-term bias. Right now, the market is above it, so I think you're going to see a choppy, sustained trade that's going to inch higher. How high can this market go? Well, it could fall apart or it could rally. We don't know. But right now, it looks like $1.12 to $1.13 are the intermediate term swing targets to the upside. Now, this is a grinding bull. It's not a raging bull. So I think that it's going to take a little bit of time before we reach that area. So for all of you bulls, you're going to have a lot of patience. For you bears, I would be very, very cautious to any type of move here, especially right now as it's trading into new highs. Let's look at some other currencies in the same trade zone. Okay. Australian dollar, US dollar. Now this one is getting a little sign of weakness. Once again today, all week long, it's been treading lower, but as you can see, it was basically unchanged for most of the sessions of the week. It's only today that this is starting to give us a little bit of trouble. So let's see, let's find our pivots here. We have the last higher swing low. That is our major directional pivot for the bulls. Right now, we are in a bullish trend overall for this currency. Only short term is it a bear. The question is, are we coming into this bottoming area and then we're going to make a run for highs again, or are we going to start to press new lows? And let me move this chart a little bit, make this a little clearer for you. Okay, so this last swing high up here, this would be our major upside target that we're looking to reach. And then we have this last swing low here that is our key support. So any failure from here will have this market on edge. Remember, it is an overall bull, but the trend, if you notice, is not too bad here. It's not too steep. Now, the short-term or intermediate trend here, it is testing that today. So the steepness of this trend is not that severe. The question is the dollar index truly starting to gain strength? Going to fall back on support. I think that right now what you are seeing is a little bit of profit taking and a little bit of levity for the dollar index, meaning the dollar is getting some strength. But I think overall that you're going to see the Australian dollar, U.S. dollar, especially because the first phase of the trade deal has been signed. I think you're going to start to see that get some strength once again, come back into this market. So since we have a series of, and this is what you always have to remember, is when you're starting out with your technicals, you start out with the most fundamental of technicals. So the first thing for identifying a trend is what? Higher move highs, higher move lows, higher move highs, higher move lows. So we still have maintained this pattern. The question is this high from yesterday a lower move high, getting us ready to take out this pivot down here at 68.48, or is this market just kind of trading sideways, pausing right now before it starts to make another run at resistance and new highs? So right now we're going to just take a look at this under the perspective that it is overall a bull. Right now it's flirting with support, but it's riding the line. So I would be very cautious selling into this. An aggressive bear, if you are going to jump in and start selling in this area here, I would be very cautious use this last swing high at 69.35 as your risk level, because if we get back above here, a breach of this and any sustained trading above this 69.35, most likely will have momentum building and fuel a rally back up to challenge the 70.33 area in this last higher swing high. Remember too that if we end up taking out this upside pivot and we don't take out this last swing low, then for sure we have a very big bullish confirmation for the trend for the Australian dollar, US dollar. Now for the New Zealand dollar, US dollar, let's see what's going on here. Now this market has been a really big bull against the dollar for months now, even when the dollar has been strong. We have a nice correction that has gone on here. 2 days ago, we set a nice swing low. So the question is this market becoming a neutral to lower trade, or is it going to come back and become a bull again? So we're going to key off of the low that was set 2 sessions ago, and then we're also going to have the current high, swing high that was set back a month and a half ago. So these pivot points are key right now for our market direction. Any failure from these spots here, or if there's a breach of this level up here, then that confirms bullish strength, obviously. And then if we have a failure from this pivot here, that would confirm that weakness is prevailing in this currency. Now the one thing is this market has been trending very, very long against the dollar since the beginning of October all the way until the end of this year. Of 2019, this market remained a bull. It's only in January that we're seeing this correction. And the big question you have to ask yourself is this a bearish market now in the New Zealand dollar, or is this just a bearish correction, setting ourselves up for a little basing and then the next rally to go higher? I would say that the trend is your friend. So we're going to, like I said, we're going to key off of that last low. And if you look at the trend from there, this is not that steep of a trend. It's easy to maintain. We could go sideways, we could go lower, we can go higher, anything can happen. But I would say key off of this last swing low, it would still be a higher move low. Remember that we had these, we have this swing low here, and then we also have this swing low here, all that help to set our trend and keep it going higher. So we have this little area of support. So even if we take out the low from 2 days ago, you're going to have a tough time getting below here. In fact, I think what we'll do is we'll just roll this down here, and this will become our true failure level for New Zealand dollar, US dollar. So overall, we're neutral to higher. Right now, I think the corrective move has come to an end. Key off of the dollar index. If we start to see a big sell-off in that, especially start to see a rally in your major currencies against the dollar, then I think your New Zealand dollar, US dollar bulls will start to come back, and we'll see a challenge of the 67.56 level up here. And if not, probably a little bit of sideways trading as it digests this recent rally and builds a base before it makes a run at resistance again. Okay, now we're going to come over and look at the US dollar CHF. Now, the one thing that we know is that the Swiss franc has been in flight to quality mode versus almost all the currencies out there. It is a raging bull. Now, we have a little bit of a turn that has occurred since yesterday in this market. It stamped a new low and settled higher and then didn't look back today. So let's see. But if you look at the steepness here of this overall trend from here And we'll even take it into this last higher move, our lower move high. So this little spot here, this is going to be a key pivot because this is our last, excuse me, lower move high. We've made another series of lower move lows here, so the downward trend still is intact. We have no reason in the world to think that this is bottoming. All we're thinking right now is a bearish correction. So as long as we are below this 97.62 pivot line here, this last swing high, we're going to stay in a bearish posture looking to sell into a rally. And because the overall trend for this US dollar Swiss has been lower, we got rejected up here at parity a few months ago, or a couple months ago, and this was a big deal. So this top right here signifies that it was no more, it was done with the parity play, which it had been trying for so long. Swiss franc is definitely stronger than the US dollar, and it's also stronger versus a lot of other currencies as well. So in fact, since we're looking at the European ones, we're going to look at the euro versus the Swiss, and you're going to see that this chart also has been trending in a free fall market as well. In fact, even today it's staying lower. So this is where, especially with the Swiss, see what I mean? It's a bull. You have the Euro Swiss here that is not turning back. It is just going lower. This trend does not want to ease up. It just maintains its slope lower. And unless we start to see a bounce in it, I think you're going to continue to see weakness for quite some time. Remember, Brexit coming up, which will be on January the 31st. Oops, let's see, we want GBPCHF. So the British pound versus the, oh boy, we're having really troubles here. British pound, CHF. Let's see if we got the symbol correct here. And there we go, it is now loading up. Okay, so this is another one that has continued to free fall. It looks like it's starting to set a little bit of a bottom. I wouldn't say that. I would say that this trend, which has been normally up the whole season, going into Brexit, which now we have a clear date set for January 31st. I think this is a little bit of a sideways correction, and this is because of Swiss strength that this is coming to lower this range. If you notice that we had been in a very nice bull trend, and then we started to base here, and we took a while to break out. Then we had the issues with the election. Boris Johnson won. Came back, had the deal with Parliament coming in. We know they got the vote that went early January, and now we're coming into Brexit, which is right here. And I think until then, you're going to probably see a little bit more of a bearish trade in this market, and it's more of a correction right now as we head into Brexit, just because Swiss strength is really winning out overall right now. So I think you're going to see a little bit of a bounce, kind of flirt with this $26.55 level before you start to see this market erode again. So now let's look at the British pound US dollar. Excuse me. And we will see how this one is faring today. Now this market has been a little bit choppy, and there's every reason for it to remain in a choppy way because of Brexit coming up on January the 31st. So until then, I think you're going to see this market kind of wedge, and I would key off of this last swing high here and this last higher move low right here. And this, especially this lower pivot, this is key because it keeps the upward trend intact, especially the neutral to higher trend intact. And as long as we are in that mode, whoops, we need to move this chart over. Sorry, making a mess here. All right, so here we have this last higher move high. This will be our critical breakout pivot to the upside. And until Brexit is over on January the 31st, I think you're going to see that this market is just going to stay kind of in a range trade between these two pivots. So $1.3286 down to $1.2901 would be your pivots to watch. Anything above this upper pivot has us targeting that last swing high and a breakout to the upside, continuing the overall bull trend that is the British pound US dollar. Especially if the dollar index remains under pressure, I think you're going to see this happen. Right now we have a little bit of strength in the US dollar, and with that being said, that strength is going to most likely be just a corrective phase that we're going through over the past couple sessions, because it's in the wake of what happened with the Middle East, and then also the signing of the U.S.-China agreement, and coming in the middle of the week. And now we're heading into Friday with markets closed around the world before the U.S. It kind of gives a little bit of profit-taking abilities. Next week, I wouldn't be too bullish on the dollar. And in fact, I think you'll see a little bounce in the pound U.S. dollar here, but then it also will stay contained inside this circle here. So once again, key off of these major pivots up here and down there as our breakout levels. Oops, now we're going to go to the U.S. dollar Swiss. And this market, like I said, which has been in a free fall. Boy, we're having troubles with the symbols today. This is not good. Okay, there we go. U.S. dollar, Swiss franc. This market, like I said, has been a major bull, especially versus the dollar and other currencies. Remember that this right now is viewed as a corrective rally. This here is a nice little buy signal that occurred here. It's a Japanese candlestick pattern, but even still, this is in a overall bear market, so you have to assume a corrective move higher. And I think that especially if you see the euro and the pound dry up, that means the dollar index is going to stay pretty flat. And then if you start to see the Australian dollar and New Zealand dollar start to get an uptick, and the Swiss come back, even if it just starts to go sideways, then I think with those scenarios setting up going into Brexit, you're going to have really good conditions for range traders. For swing traders, I think you're going to have a bit of a tough time over the next 2 weeks, no matter what the currency is. So it's going to be a grind higher in the US dollar yen, Australian dollar, New Zealand dollar. We're looking for a buy signal. With the U.S. dollar Swiss, we know the Swiss is an overall strong bull, so the U.S. dollar Swiss is probably going to be only in a corrective rally. So as far as trades, we're really looking at some tough ones going into the next 2 weeks for swing traders, and I think that your range traders and volatility traders who are trading options are going to just clean up, because we're going to have a lot of sideways action in some of your major currency crosses. And if that happens, you're probably not going to have the U.S. dollar index wiggling and jiggling too much. And if that stays really constant, unless we have something to stir up the interest rate market to then cause a ripple effect into the currency market, you're looking at a very dull trade going into the next 2 weeks as we wind down the month of January and the first month of 2020. So we've had a lot of volatility recently, so it's not out of the realm of possibility, let alone likely, that we would settle into a little bit of a neutral period. We've had a lot to digest, and especially with Brexit coming on now, it's really going to be the main thing is what is the atmosphere for the euro, for the EU and the UK. Now we have the euro under pressure today. A lot of this talk is because of some of the numbers with how the dollar is looking. I think that this is just really just a little extension of this correction. Remember, we are below this last higher swing high, but we're still above this last higher swing low. So this pivot here is definitely critical. Any trading above here, we're still looking for a break to buy and assume that this is a corrective slide off of this last swing high. Remember, the overall trend is a bull since October, and the slope is not that bad either here, folks. So that's the one thing you kind of have to take into account when you're looking at this kind of a trend, is that what is the steepness of it? And we're coming right into this upward sloping support line. There's a little tongue twister. So even if we take out these last swing low, right, higher swing low here, it wouldn't be that big of a deal. We could lean on this support here, maybe even take it out, but then we're riding right on this area. So we'll see what comes to fruition over the next couple sessions. Today you're probably done as far as pushing the lows. The question is, will we strike it lower on Sunday night's trade into Monday morning as the markets open up and start next week? Once again, we have Brexit deadline coming in, so it's not unlikely that this market just comes right back up and starts going sideways. So I think that as we move into Brexit, we got a lot of circles here, don't we? So this one here, this is probably the area you're going to see most of the trading. So we're going to get rid of this one right there. Okay, so there we go. So this is probably the area you're going to see the euro US dollar gravitate back into as we close out the month and also have the Brexit. we'll move it there and just keep it what's inside the pivots. So overall, our expectations aren't very high because the low here is $1.1066 and the high of this range is $1.1240. That's not a very wide range for the euro US dollar to chop around in over the next week and a half, 2 weeks. But considering how the average range has only been 40 to 60 pips a day in the euro US dollar, it's very easy for it to fulfill this little short-term prophecy. Remember, even if we hit support, unless we start to really take out lows, and I think that this one hit over here, this one I'm going to mark is going to be your last critical one. Only if we get a failure here do we really start to get bearish this market. Any trading still above this area here is really strong. 109.78 I think is your line in the sand, because then that would start to neutralize the trend. But I don't see us getting down that far. There's really no reason to hit the euro right now and sell it off that bad. So we'll see. Like I said, we have Brexit coming into the mainstream focus for a bunch of our major currency crosses versus the dollar. So you have the euro and the pound, which are the two biggest weights, that if they start going sideways, that leaves the dollar index pretty much in a very quiet, tight trade for the next 2 weeks as well. So as far as the trends that have been established and have been going on for the past couple of weeks in certain currencies, in fact, many of them, they may start to dry up. Now that's where why we looked at the euro versus the pound and the euro versus with the Swiss, just because there's action there and certain swing trades there, just because they have a little bit more of a trend going on with the Swiss. There's a chance for, obviously right now we're in a corrective phase against the dollar, which is kind of normal. Right now we're looking for a little correction before the trend continues lower. But that's where you're looking for some swing trades, is with the Swiss franc versus other currencies. The dollar, because the two major ones are going to dry up, it's going to tighten it up. The US dollar yen, remember, will be the other grinding bull that we're looking at. So with that being said, we've covered all of the major currencies around the globe. There's really nothing left for us to say except for good luck with the rest of the trading day. Have a nice weekend, and don't forget to subscribe to our YouTube channel, and always check us out at www.forex-trading-unlocked.com.